Good morning. I have come with the module 7.5 where I will explain the computation of pre-construction period interest. So in the house property computation, we have learned the theoretical concepts, how we will calculate the net annual value, how we will calculate the rental income from let out house property, how we will calculate rental income from self-occupied house property, then pre-construction period interest is the next module. And finally, we have calculated the complete problems for house property. So this pre-construction period interest is important because when you are doing full problems, sometimes this pre-construction period interest will be there. Now, what do you mean by pre-construction period interest? See, what I want to explain is, see, sometimes when the moment we decide we will go to or we will block one flat or a house property for purchase, that time itself we are eligible to take a loan, but the complete construction may be completed after 2 3 years or 4 5 years, or at the time of building one apartment itself, when they will put the foundation stone itself, you can go and book one flat wherever according to your choice, which floor you want, how many bedrooms, you can book that. So you have to pay a minimum loan amount, minimum amount as the initial deposit. So what will happen here is, so from that year onwards you will be paying the interest, emis you will be paying, but you can claim housing loan interest only after completing the construction of the house property. So that is, so then if the income tax department is not giving the concession or not giving the privilege of taxpayer to claim the interest what they have already paid, that is at the time of booking the apartment or house property till the completion, so they will not get any tax advantage. So this income tax department is giving, or income tax provision is giving certain advantage to the assessees to help the taxpayer to reduce their tax liability. So from the date of starting the loan until the completion of the house property, that period is called the pre-construction period. I will explain with the help of date, values, everything I'm going to explain with the PowerPoint presentation, and I hope this concept is clear to you. That is, pre-construction period is right at the time of blocking that building or construction, or you're paying the down payment, then itself you can apply for a housing loan. Then you can continue to pay the emis or the monthly loan amount, you can pay that monthly installments, you can repay, but you can claim tax exemption only after completing the construction of the house property. When it is incomplete, you have no right to claim the tax exemption. So if income tax department is, or income tax provision is not allowing the taxpayer to make use of this privilege, then it will be a huge loss for the assessee, because sometimes this pre-construction period may be for 3 years, 4 years, 5 years. So the tax provisions are there to claim from the time of starting the loan till the completion of the house property. If you have paid any loan in between, that you can claim along with the annual whatever loan you will pay every month. This pre-construction, before construction, whatever you have claimed, whatever you have paid, we will take the total value, divide by 5, that you can claim for next 5 years. So this will be little confusing if I'll explain like this, but I want the values to explain this. So this you have to remember that sometimes when you're doing the complete salary problem, sometimes this pre-construction period adjustment will be there. Similarly, this concept is important as a theory concept, theory question also. What do you mean by pre-construction period? Sometimes they will give the dates and you have to write what is the pre-construction period in that, or what will be the amount they can claim as deduction for the pre-construction period. So that is why this module is very important, and I am going to explain with the help of PowerPoint presentation. It is very simple concept. I'll make it very clear, and this is a very simple concept. And 2 problems also we are going to do that, so that it will be clear. The meaning of pre-construction period interest. So I will explain. I have already explained what is the concept, but now I'll again explain in simple terms. Deduction on home loan interest cannot be claimed when the house is under construction. It can be claimed only after the construction is finished. So this is the point you have to remember. People will take loan. See, 2 3 years before completing the house property itself, banks will give loan. But you can claim tax exemption only after completing the construction of the house property. Second point is period from borrowing money until construction of the house is completed is called the pre-construction period. See, for example, a house property. If I am taking a loan on 1st April 2014, but the property is completed on 31/3/19. So 1/4/14 to 31/3/19 is my pre-construction period. 31/3/19. That meaning 34/19 onwards every month I will be paying my housing loan. Then whatever I have paid for this pre-construction period also I can claim. So that is the calculation I am going to explain. So interest paid during this time can be claimed as a tax deduction in 5 equal installments, starting from the year in which the construction of the property is completed. So the moment the construction is completed, from that time only they can claim the exemption. I am going to explain this. So interest on pre-construction period. So interest on pre-construction period meaning pre-construction period I have already explained the date you are taking the loan till the completion. So pre-construction period means the period commencing on the date of borrowing. We are taking the example 1/4/15. 1st April 2015 you are taking a loan, but you are completing on 30/6/19. 30th June 2019. So the pre-construction period is 31st March immediately prior to the date of completion of construction or date of acquisition. Either it can be completed, construction, if you are constructing on your own or a builder is constructing that, the construction is completed. Or if it's a property or if it's an apartment, you have acquired the property. Now you have to remember that date of repayment of loan whichever is earlier. So you just forget about that I will explain. See, your date of loan is 1/4/15, 1st April 2015. Date of completion of construction of house property is 30/6/2019. So starting date is always the date of the loan, 1/4/15. Ending date you have to remember the immediately prior to the date of the March 31st, immediately prior to the date of completion. See here, it is June. You cannot take a date beyond June. Before June, what will be the 31st March? That is how you have to take. So that is how you are getting pre-construction period 1/4/15 to 31/3/19. I hope it's clear. See, if it's 38/19, then also it will be 31/3/19 only ending date, because the March 31st prior to that date of starting the loan will be the same. There will not be any change. But ending date you have to remember that March 31st immediately prior to the date of completion. So that is 1/4/15 to 31/3/19. Now tax treatment, interest on pre-construction period shall be allowed as deduction in 5 equal installments. So in this case, when until 31/3/19 we have completed the pre-construction period. From that financial year onwards, 5 years they can claim the deduction. So that is the thing you have to remember. 5 years this pre-construction period interest is allowed as a deduction. See, if the total amount of pre-construction period during the pre-construction period, imagine they have paid 12 lakhs as housing loan. So that meaning 12 lakhs divided by 5. So that will be the next 5 years. After completing the construction, next 5 years they can claim that amount. I am going to explain this again with the help of data. So important points you have to remember. It is from the year of home loan taken till the year in which construction is completed. This point again and again I am explaining. Home loan is taken. So usually people will take 2-3 years before itself, because when an apartment is getting constructed, if it's a good builder, so after completing the construction, if you go and bargain, it will be very high rate. So what you will do at the initial stage, when the foundation stone it's laid, then itself you can go and book. So that is the advantage. So that date is important. So and you can claim housing loan only after completing the construction. So between this date of loan and date of completion. So that is the pre-construction period. So interest will be allowed from the date of loan taken till the 31st March before the financial year in which construction is completed. So I told you how you calculate pre-construction period interest. Date of loan 1/4/15 and 36/19 is the ending date. Construction is completed. That meaning the previous March 31st, 31/3/19. That is the pre-construction period. Now pre-construction period interest will be divided in 5 equal installments. So total, so that is why I told you 12 lakhs divided by 5 or 10 lakhs. If it is 10 lakhs divided by 5, after completing construction, 2 lakhs for next 5 years they can claim. Now allowed for 5 successive financial years starting with the year in which acquisition or construction is completed. So from the time it's completed, they can claim for 5 years. Now this deduction is not allowed if the loan is utilized for repairs, renewal or reconstruction. It's only for construction purpose if you're taking a loan. Then only you are eligible to get the loan. You will not get it for repairs, renewal or reconstruction. Now 2 problems we are going to do. Simple problems, this adjustment I want to explain, that is why I am doing this. Compute the income from house property from the following particulars for the assessment year 2021. So particulars, municipal rental value, actual rent received, municipal taxes, date of loan. See the same date I am taking because again and again I want to emphasize that 1/4/15. Date of completion is 31/3/19. So your pre-construction period is 1/4/15 to 31/3/19. See, earlier example we took 36/19. So it has to end with 31st March. So date of completion here there is no problem in computing 1/4/15 to 31/3/19. Now annual housing loan interest is 1,50,000 per annum. So 1920 financial year 1,50,000 they can claim. That is the annual housing loan they are paying. Along with that, between 1/4/15 and 31/3/19, whatever they paid, total we will take divided by 5, that also they can claim. That is pre-construction period concept. So interest on delayed payment of interest, see that is 10,000. It's not an allowed item as that I've explained with the computation of income, computation of house property. Then date of letting the house property 1/4/2019. The next month onwards, so the house property was not vacant. So 1/4/1920, 1920 1,50,000 they can claim as housing loan. Plus this pre-construction period, whatever the total divided by 5. So for next 5 years they can claim that. Fire insurance premium due, it's not allowed. Ground rent due, it's not allowed. These items are not allowed and more than that it's not paid also. Now you are going to do the computation. So next slide I am going to explain how we are doing the pre-construction period. So table showing the computation of income from house property. Municipal rental value or actual rent received, whichever is higher is the annual rental value because other values are not there. Fair rental value, standard rent is not there. So 30 lakhs. Less municipal taxes 24,000. So net annual value you will get 29 lakhs 76,000. Now less standard deduction. This is let out house property, so he will get standard deduction 30% of 29 lakh 76,000, 8 lakh 92,800. Now interest on loan for current previous year. Already I have explained 1,50,000 they can claim. Now pre-construction period interest 1,20,000. How you are getting that value I am going to explain in the next slide. So total 8,92,800 plus 1,50,000 plus 1,20,000. 11,62,800 they can claim. So income from let out house properties 18,13,200. You have to remember that interest for delayed payment, fire insurance due and ground rent are not allowed for computing income from house property. Now pre-construction period I am going to explain. So date of loan is 1/4/15. Date of completing construction is 31/3/19. So your pre-construction period here it is ending with March. So you don't have any confusion. Starting date is date of starting the loan 1/4/15 to 31/3/19. Annual housing loan interest is 1,50,000. So how many years they can claim? 15-16 they paid. 16-17 they paid. 17-18 and 18-19 they paid. So total 1,50,000 into 4. 6 lakhs they have paid. as housing loan interest before completing the construction, because they have taken the loan on 1/4/15. So 6 lakhs they paid. Now pre-construction period interest, whatever exemption they will get is, I told you, the total divided by 5. It's very easy to remember the total value divided by 5. That is how you are getting 1,20,000. That I have explained in the previous slide. Pre-construction period is 1,20,000. Now you can claim this value for next 5 years. So date of completing the construction is 31/3/19. So 1920 they can claim, 2021, 21/22, 22/23, 23 and 23 and 24. So 5 years they can claim. Pre-construction period interest for this is problem is 1,20,000. So it's simple concept. Try to understand that. Now the second problem, Mr. A owns a building which consists of two identical units. One is self-occupied and one is let out. The construction was completed on April 1st, 2019 and the buildings were occupied on the same date. So there is no vacancy for that. Details of the properties are as below. Fair rental value 60,000 each. One is self-occupied, one is let out. So rent received. First one is self-occupied, it's not applicable. Second one is 72,000. Municipal taxes paid 3,000 and 5,000. Municipal taxes due and paid on 15/6/2020. Municipal taxes due, it is not allowed 3,000 and 5,000. Land revenue due but paid on 15/6/2020. It's not allowed. After the previous year, it's not allowed. Now, on 1/4/18, he borrowed a housing loan of 5 lakh at 12%. Compute his income from house property. So this is the table showing the computation of pre-construction period. First we will calculate. Date of loan is 1/4/18. So amount of interest, they have taken a loan of 5 lakhs at 12%. So every year they have to pay 60,000. Now pre-construction period is 1/4/18 to 31/3/19. 1/4/18 to 31/3/19. So pre-construction period, it's only 1 year only they have paid that. So 60,000 divided by 5, 12,000 they will get. It can be claimed for next 5 years. 12,000 each for next 5 years. That meaning 1920, 2021, 21/22, 22/23 and 23/24. So amount of pre-construction period interest is 12,000. Now coming to the computation. See this table showing the computation of income from house property for the assessment year 2021. So both the houses, one is self-occupied, one is let out. Fair rental value 60,000 each. Rent received, self-occupied, it is not applicable. Let out house property 72,000. Annual rental value or rent received, whichever is high. So here it is 72,000 for let out house property. Less municipal taxes actually paid is 5,000. You will reduce only from let out house property because self-occupied house property net annual value is nil. Now here you will let out house property 72,000 minus 5,000, you will get 67,000. Less deduction under section 24. Standard deduction you will get only for let out house property, so that is 20,100. Now interest on loan taken for assessment year. Interest on loan taken for 30,000. 30,000 for both the houses. Pre-construction period is 6,000 each. And loss from house property 36,000 and 10,900. So that total loss from house property is 36,000 minus 10,900. You will get 25,100. So here 12,000 is the pre-construction period interest. Two house properties are there. So self-occupied house property can get 6,000. Let out house property can get 6,000. So that is how we are dividing that. This is the computation of pre-construction period interest. You have to remember, sometimes when you will get the full salary problem, this concept will be there. Even otherwise also, they will ask you the concept. This, what is the pre-construction period as a theory question. Sometimes they will give you values and you will be asked to calculate what is the pre-construction period. You have to remember, date of loan is the same, starting point. That is the starting point. And ending date of construction, you have to completing the construction, you have to see that. Previous March 31st, that will be the ending date. Then sometimes they will give you the values and they will be asked to calculate pre-construction period interest. So these are all important for examination point of view. Sometimes when you're doing the full problem also, you have to do that. So that is why it's important. Please understand this concept. So this is very important because sometimes in the full problem also pre-construction period concept will be there. So I hope you understood that, and happy learning and give me a valuable feedback. Thank you.